Hello, welcome to the Global View on this Thursday. I'm Andrew Gagan. Great you can join us here at ausbiz. So let's check what happened overnight. Global equity markets mostly lower, while both US Treasury yields and the dollar weakened. This as data showed the US economy expanded at a solid 2.8% pace in the September quarter, helped by consumer spending while inflation remains stubborn. It has investors worried ahead of Thanksgiving that interest rates may not fall as low as expected. Wall Street's main indices fell, with the Nasdaq leading declines as tech stocks slumped. Dell fell heavily, along with HP, after downbeat quarterly forecasts, and CrowdStrike also falling. And the negative sentiment spread to the megacaps such as Nvidia and Microsoft, which saw the Philadelphia Semiconductor Index drop to its lowest level in more than 2 months. Workday fell after forecasting fourth quarter subscription revenue below expectations, hit by weaker client spending on its human capital management software. Well, the US personal consumption expenditures price index climbed 0.2% in October, in line with the previous month at an annual rate of 2.3%. Excluding the volatile food and energy components, core inflation rose 0.3%, increasing 2.8% in the 12 months through to October. And US consumer spending increased 0.4% in October, suggesting that the economy maintained its strong pace of growth early in the fourth quarter. And gross domestic product increased at an unrevised 2.8% annualised rate for the September quarter. Well, the bond market reaction was muted ahead of the Thanksgiving Day holiday tomorrow. The US 10-year yield was around 4.23%, the 2-year dropping to 4.21%, its lowest level in more than 2 weeks. And the US dollar has eased against most currencies, with the Aussie trading at 65 US cents. And Bitcoin has rallied back above 96,000 US dollars. On the commodities front, oil prices little changed, with supply concerns easing after a ceasefire deal between Israel and Hezbollah. Brent crude futures at $72 a barrel. Copper around 0.5% higher. Iron ore close to 1.5% higher to 104 US dollars a tonne. And gold has been boosted by a weaker US dollar to be at $2,638 an ounce. All right, so let's get across what we're seeing on Wall Street in particular. Ira Epstein joining us from Linn Associates. Ira, lots of data to get our heads around there. How did you view it?
You know, everybody's out of the market. Let's understand what's going on. Trading volumes in America get very thin. You're going to have a half day of trading in the futures markets come Friday. The stock market will open for a limited brief session as well. But for all purposes, people have walked away. And I think if you try to make heads or tails out of today's action, you're going to get dizzy, because it's more evening up than it is anything else. But what your charts showed, Andrew, and that this was the important thing, when you looked at the PCE index, you noticed that you're just going sideways now in inflation. It's not breaking, it's not railing very much. You're in that sticky part. And that's where the argument comes in. Before the markets open, the probability on the CME Fed Watch page, and that's what it's called, CME Fed Watch page, if you want, it was around 59.4% for a 25 basis point cut in December. It jumped to 70% after these numbers came out, but I don't understand why. These numbers don't warrant anything one way or the other. So what it's going to do is put this coming week, not this week, but the week after, very important to get the U.S. jobs data. We get the JOLTS report, which shows how many jobs are being offered, is that number going up or down, what's taking place there. We'll get the ADP private report on what they're showing from the people that they're paying, actually. And then we'll get the Challenger Gray, which comes out with corporate layoffs. So that is the next big piece that the market will look at. So, whether the Fed goes a quarter point or not, does it really matter? I think what's happened is we've seen the change. The Fed is not going to go every meeting. They don't have to unless the data starts weakening, which it has not been doing. The data is also not getting a lot stronger. Therefore, I think the Fed is going to recalibrate. I think that's the word you want to put into your vocabulary. And they'll either go a quarter or not. They'll look at what they've done for the year, and that's it. How much more can they cut? I doubt that there's more than 1% left if they need to go that far in all of 2025. Again, the data will determine that. But right now, our economy in America is very strong.
Do you think the market is actually looking at that, perhaps that terminal rate or a neutral rate is actually higher than initially expected.
I have been with you for how long doing this? I told you they would not get to a 2% number. That is a fallacy number. The new neutral rate's probably closer to 3.5%. The old days of 2% inflation, at least in America, going to be very difficult to get there and stay there. Anything can happen on a 1-month basis, but you want to take a 3-month moving average, and that will be the more important thing. And with the Trump tariffs, or at least the threats of them coming into place, you have a whole new game in America. And we have to understand what it is. You know, he threatened, to my surprise, Canada and Mexico all in the same statement, both with 25% tax. Do I think that will happen in terms of a tariff? No. But I think it's a negotiating point that he sets the ball rolling. And the person that handled it properly was Prime Minister Trudeau, who immediately called and had the conversation. President Sheinbaum out of Mexico took a different tack. She took to the airwaves and she says, you know, we'll tariff you back. Big mistake with this particular president. So she's got to show herself, number one, that it's the first time she's president. She's going to show that she's a strong woman. Here's what she'll do. But in the end, there'll be a compromise.
What are you seeing with commodities and the response, particularly, I guess, where the US dollar is tracking? And we note that gold has made a bit of a comeback. I know you like bullion. Is that remain? No?
Well, I told my clients to actually cut back on their bullion position on this rally. I think that bullion now, what you own is the maximum you want to own right now. It's not the place to be adding, in my opinion, at least, new money. I think you want to go into Bitcoin in place of that. How's that for a statement? And you have to understand, every day you're going to talk to me each week, it's going to move 10% one way or the other. It's just the nature of that beast. However, there's no more of it. We have new generations of followers for it. We have it now, a new asset class, and it is a storage of value. It too doesn't pay interest, but people love it. For whatever reason, Trump is behind it now. Remember, he wasn't at the beginning, and now he is. And he will put in people in government that like it as well. So this is what you have to do. You have to bend and go with the flow now. And that's where that flow is gone.
Goodness, Ira, so you're saying perhaps it's inescapable. You need to have exposure to crypto.
Absolutely. Absolutely. And I know you're going to say, well, Ira, you're saying this at $90,000. You're right. I am. What can I say? I was a disbeliever in Bitcoin forever. And I realize now that people want it. They're not going to get rid of it. And c'est la vie. So, if you want to keep fighting the ship, terrific. Am I advising heavy positions? No, but you tiptoe in over time, use the deep breaks, and that's the beauty of Bitcoin. It gives you those breaks, and I think you have to step into the party.
Ira, what are you seeing on the equity market at the moment? Obviously, Thanksgiving, end of month, volumes low. But we take a look at tech in particular, has come off. Any particular reason for that?
I think it's the holiday move right now. Here's what's going on. There's a rotation right now, especially today. You saw CrowdStrike, you saw Dell, Hewlett Packard. They're all getting beaten up today. We've watched it, NVIDIA's drop back, and NVIDIA's got a pattern that you should pay attention to now. For the past few quarters, you get a number that comes out. It's generally a good number. The market rallies and then breaks pretty hard, often a 10% or more break. That's what you're in right now. It's too soon to pick it up, let the market fall, I would say into the 120s. And at that point, I start taking another look. What the market keeps offering are these breaks to come in, and then you come back up. Now, I'm not with people that thinks that NVIDIA is going to infinity, because I do believe that other companies will have innovation and come on. But they probably have a 1-year window. Their PE is pretty high. If you overpay, you get into trouble. So I do think there's a rotation. People want to own, for whatever reason now, the small caps. So the Russell is holding up actually better than a number of the other indices. And that probably has to do with the fact that people just want to get to something that hasn't rallied as much as other markets that are getting a bit rich in PE value.
Ira, Enjoy Thanksgiving. Thanks for joining us on Linn Associates.
Thanks for having me.
All right, let's turn to the local market just before we get going. On this Thursday, we are expecting a modestly higher opening there. And of note, we should be focusing on the lithium miners today, given the WA government has thrown a $150 million assistance package to the miners in that state. So stay with us. The open is just a couple of minutes away.